Good afternoon, I'm Tom Elliott, Director of Beulah Capital, and welcome to the March quarter share market update. Okay, well overall we've seen a lot of volatility over the past few months. In January there was a very sharp sell-off, February there was a big rebound, and in March the markets were essentially flat. So whatever it was that you were into over the past quarter, you got lots of volatility. Resources were generally weaker because the Chinese economy appears to have slowed marginally. Of course that is very important for us here in Australia. Having said that, that was offset by the financial sector hitting almost new record highs thanks to the big banks. Strong house prices are largely to blame there. And also internationally we know that Russia has made these moves on the Crimean Peninsula and the Ukraine. That was probably responsible for some of the volatility during the quarter, but overall I don't think it's something that investors should really worry about. One thing that has happened and certainly got the Federal Treasurer worried is the Australian dollar. He was hoping, and I think many people were hoping in the manufacturing sector at least, for the A-dollar to continue falling. Instead it has rebounded around 4 to 5% over the past few months. Okay, the three portfolios that we internally manage at Beulah. Firstly, the takeover target portfolio. Now, during the quarter we added New Farm, which is the agricultural chemicals company, and also Investor Office Fund. One of the reasons we wanted to add Investor Office is that we decided just after quarter end to sell out of Australand property. It had done very, very well. In fact, looks like it has received a bid of sorts from Stockland at the moment. And again, we've taken profits there, but we want to have some exposure to the property sector. We also increased our holdings in Cube Holdings, Spark Infrastructure, and Mortgage Choice. Mortgage Choice we think will benefit from the very strong housing market that I alluded to before. And look, we took profits of things like Investra, which again has done extraordinarily well. It does have a bid on the table. And also Double iNet, we took partial profits in that. We may look to re-enter Double iNet if it falls back further, as it has done since we sold it. Secondly, the income portfolio, which is essentially where we try and invest in stocks which have a higher than average dividend yield. And again, this is aimed at people who are perhaps in the retirement phase and rely more upon dividends than capital growth. We had no changes to the portfolio during the quarter. However, it was pleasing to note that CommBank produced a very good set of results, and in fact has increased its dividend in line with expectations. But again, CommBank is a very big part of the income portfolio. Also, Telstra had an excellent interim result and in fact added slightly to their dividend, which they haven't done for a few years. Telstra again should benefit from the rollout of the NBN, and for investors it's of intense interest as an income producing stock. And also BHP maintained their dividend policy of always keeping their dividends or increasing them, but almost never cutting them, and that's very pleasing to see that BHP, albeit that it's normally a resources growth stock, is now capable of being seen as a solid provider of dividends, albeit with a relatively low yield. As to our growth portfolio, this unfortunately we had a little bit of underperformance during the quarter. We were slightly overweight in resources, and I mentioned they got sold off a bit because of concerns about the Chinese economy, and we were slightly underweight in banks, not dramatically, but slightly underweight, and banks of course were the darlings over the past 3 months because of the strength in the housing market. We decided to remove Coca-Cola Amatil. We had a small stake in that. It underperformed with its last profit result, and it really was quite bad. And in fact, since we sold it, the stock has continued to fall. So Coca-Cola Amatil has been a big underperformer. And during the quarter, we did in fact add to our banking sector weightings by buying shares in ANZ, CommBank and Westpac, who we think are probably the superior banks to hold there as opposed to the NAB. We also decided to take a position in property company Stockland, which we think will be part of the roll-up or the consolidation that we're expecting in the listed property fund. And I guess the final thing we had to do, and we didn't really want to do it, but we sold out of 20th Century Fox, which used to be known as News Corp, of course, run by Rupert Murdoch. 20th Century Fox has decided to exit the Australian Stock Exchange, and like a lot of fund managers, our mandate does not allow us to own companies that are not locally listed. So bad news for 20th Century Fox. We will try and find a replacement. Okay, hopefully the next quarter will be better than the last quarter. I'm Tom Elliott, Director of Beulah Capital, and thank you very much for your time.